It is one big meta story. The U.S. scours the world for natural resources. Hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli, and if you've been listening to this show, you'll know we've been discussing Myanmar for about a year as a potential flashpoint, in the sense that most of the heavy rare earths that China refines and has 99% control over the world market, as far as the heavy rare earths, those are the important ones that are often used in the military, not to say that the magnets aren't important. A huge proportion of them come out of Myanmar, which is adjacent to China. And we have a civil war there. The Kachin Independence Army, or the KIA, and other rebel groups, and then there's the military junta that runs Myanmar. Now, the Chinese have been backing the military junta, but they also seem to be working with the KIA. In a sense, they're working with both sides, perhaps wisely, in the sense that they can't afford to lose access to the rare earths. Meanwhile, we have this big development that Washington is making a diplomatic push towards Myanmar in order to try and actually loosen the grip of China on those rare earths that are coming out of the country. We have a few headlines here that I'm going to share with you. Here's the big headline I woke up to this morning. I load up CNBC, top headline on CNBC.com. They have to give us magnets. Trump warns of 200% tariff on China if exports are curbed. Quote, they have to give us magnets. If they don't give us magnets, then we have to charge them 200% tariffs or something. End quote, Trump told reporters after a meeting with South Korean President Lee Jae-myung at the White House on Monday. So a little non-committal, perhaps, in his threat, saying 200% tariffs or something. But nevertheless, it shows that these rare earths are still top of mind, as one would expect. And let's not forget, it was at the end of July, beginning of August, so about a month ago, that we heard from a U.S. administration representative who said they were basically halfway there on negotiations on rare earths, which frankly doesn't sound very far, after all of the discussion that these two economic giants have had. So Trump comes out with the big headline. But really, one could argue the bigger headline is actually coming out of Myanmar. So here's a headline from nomusica.com. China and US compete for Myanmar's mineral-rich Kachin state. So the US is getting more and more involved in Myanmar, and this is basically what we've been saying is kind of the obvious move here. As I mentioned about a month ago, if China would be so audacious as to cut off the rare earth supply to the United States, to their military, and just say that's a no-go, what is the obvious move to do if you're Washington? That's to get involved in Myanmar, where a large portion of these heavy rare earths, those oftentimes with the military applications such as dysprosium, terbium, and samarium, as detailed by the New York Times in a fantastic article 2 months ago on their military importance, particularly in missiles. So let's take a closer look here at what the U.S. is up to. Again, this is No Musica on August 25th, so yesterday. Myanmar's Kachin state, rich in rare earth minerals, is emerging as a potential center of competition between China and the United States. Both powers want access to the region's resources, raising concerns of increased geopolitical tensions. China already has strong ties with the ruling military junta and the Kachin Independence Army, or KIA. It is likely to use economic and diplomatic measures rather than military force to maintain influence and secure access to rare earths. Experts say Beijing may work to ensure Kachin's autonomy under a political settlement or strengthen its control through the junta or KIA. So China playing both sides, they can't afford to lose the rare earths coming out of Myanmar. On the other hand, the KIA, who seem to be running a lot of these mines now, I mean, there's nowhere else to send these things right now. China is the place where you process them. It continues, the United States is reportedly considering more diplomatic engagement with the junta or KIA to gain access to the rare earth reserves. U.S. officials are suspected of supporting anti-junta groups in the region, though KIA's remote location near China and India has limited their benefit. Geography gives China a major advantage. Kashin's mines are close to the Chinese border, and China's processing facilities are nearby. Any attempt to transport rare earths to India or other countries could be blocked by China. Analysts warn that this makes a direct U.S. effort to secure these resources challenging. While the U.S. may try to challenge China's dominance, Beijing's existing relationships and regional leverage make it more likely to succeed in controlling Kashin's rare earths. Observers say that Kashin is now at the center of Sino-U.S. competition, shifting the focus from infrastructure projects like the China-Myanmar Economic Corridor to control over critical minerals. That is quite a sentence. Observers say that Kashin is now at the center of Sino-U.S. competition. So, another reason to listen to this podcast, we've been discussing this for a year, and it still seems like it's just ramping up. There is another development here in this U.S. outreach. Here's a story from The Conversation. Wait till you hear this. As Trump lifts sanctions on Myanmar elites, is he eyeing the country's rare earth reserves? As it says here, a week ago, U.S. President Donald Trump removed sanctions on some allies of Myanmar's generals and their military-linked companies, a move condemned by the UN Special Rapporteur on Human Rights in Myanmar. Then came reports the Trump administration was exploring opportunities to access Myanmar's rare earth minerals in an effort to sideline its strategic rival, China. So, Myanmar increasingly is in the spotlight here as the source of many of these heavy rare earths that play a huge economic and military role. And then we have a story from Foreign Policy, an analysis from Derek Grossman. Trump is inching toward a major strategic blunder in Myanmar. Washington appears poised to reach out to the military junta as part of its obsession with critical minerals. Now listen to this. August 21st, U.S. President Donald Trump's fixation with securing access to rare earth minerals is creating the conditions for a poor strategic decision in Myanmar. According to a recent report, the Trump administration is considering a range of options to access rare earths in Myanmar, the world's third largest producers despite the ongoing civil war, including supporting the rebel Kashin Independence Army, KIA, and engaging in direct peace talks with the military junta led by Senior General Min Aung Hlaing. Neither of those options are intrinsically bad, and both may even be necessary to end the conflict that has been raging in Myanmar for more than 4 years. Scrolling down, in July, the Trump team relieved sanctions against several of the junta's top allies and military-linked businesses. Even more worrisome, the U.S. Treasury Department dropped the sanctions soon after Min Aung Hlaing wrote a letter to Trump praising the strong leadership shown by his crackdown on government-funded U.S. media that had been critical of the junta and its activities. A senior White House official denied that there was any link between the fawning letter and Trump's decision, but the administration has not given any explanation as to why the sanctions were lifted. Sensing that this could be its best shot to reset U.S.-Myanmar relations and maybe receive support from Washington to finally vanquish the opposition and win the war, Naypyidaw is pretending to clean up its act. The regime, for example, declared that it would hold national elections in December or January of this year, despite that free, fair, and inclusive elections would be impossible because of the ongoing war. So, Myanmar increasingly in the spotlight. Another development, this is from a Thai website, transbordernews.in.th. Geopolitics and rare earths, China, the United States, Myanmar, and Thailand from the perspective of a Kashin environmentalist. And scrolling down this article, we see more outreach by the U.S. When asked about a recent visit by U.S. representatives to Kashin, the conservationist said that the Kashin Resource Concern Group did meet with a U.S. representative. Quote, "But I personally don't like it because the area used to be peaceful, but now it seems the United States is supporting the Myanmar military. They should not come now, should not visit or speak right now. I don't like it, I cannot accept it, but I don't know how others think. It's geopolitics. What is their objective?" Now, we saw the administration play both sides in regard to the DRC and Rwanda. So perhaps a similar tactic at work here is President Donald Trump's fixation, as Foreign Policy put it, for rare earth minerals and natural resources continues. Continuing on rare earths, a massive story. China tightens rare earth rules, extending controls to imported minerals. And this was August 23rd. And one wonders if these are the headlines that President Trump is responding to. And this is the South China Morning Post. Under new guidelines, producers must report data on the flow of strategic materials, including those coming from abroad for refining. Which seems to mean that if the U.S. is sending rare earths to be processed by China, that these are going to be under increased scrutiny. This by Mandy Zhou. On August 23rd, China on Friday announced tighter rules over the mining and processing of rare earths, extending controls to imported minerals, and requiring enterprises to report the flow of the strategic materials monthly. The rules were released as guidelines on the implementation of the country's rare earth management regulations, which took effect in October. The rules specify that China's quota system applies not only to domestically produced materials, but also to those coming from abroad for refining, a change that some fear could put further pressure on global supply. Rare earth production enterprises should, by the 10th day of each month, enter the previous month's data on the flow of rare earth products into a newly established information system, according to the document issued by 3 departments led by the Ministry of Industry and Information Technology, or MIIT. The document, effective immediately, provides detailed guidelines on how government agencies should manage quotas for designated companies and make the flow of rare earth products traceable. So if anything, China is adding oversight, and one wonders if this is what Trump is responding to in that headline. Again, threatening tariffs. So interesting development there. Now, on the U.S. front, there was a significant breakthrough by Energy Fuels. And this is by a staff writer at mining.com on August 21st. Energy Fuels produces first heavy rare earth oxides. Energy Fuels says it has successfully produced the first kilogram of heavy rare earth oxides at pilot scale from its White Mesa mill in Utah. For years, the Lakewood, Colorado-based company has been the leading U.S. producer of natural uranium concentrate. Its White Mesa mill represents the country's only licensed uranium mill from which critical minerals such as vanadium and rare earth element oxides are produced. Commercial production of rare earth elements, in particular light rare earths, neodymium and praseodymium, started in June 2024 after 3 years of pilot work by Energy Fuels and subsequent commissioning of its rare earth separation circuit. Recently, the company confirmed that the White Mesa facility also has the capability to produce heavy rare earths, namely dysprosium, terbium, and samarium, which are less common and are key to high-performance technologies and military applications. Successful production of these minerals would make it the first U.S. supplier of heavy rare earths that processed mined ores at a commercial facility, Energy Fuels has said. The heavy rare earths pilot project began in mid-July, beginning with dysprosium, then moving on to terbium and samarium. Pending its success, commercial production could begin as early as the fourth quarter of 2026, so in a little over a year. And here is the press release. This is Energy Fuels CEO Mark Chalmers. Quote, Energy Fuels' high-purity dysprosium oxide production is a major leap towards securing a U.S. supply of heavy rare earth oxides for a variety of commercial and defense uses. This is real, high-quality material in hand, ready for independent testing, demonstrating that our Utah facilities can deliver world-class critical minerals domestically. Data and knowledge from our pilot plants will guide the design and construction of commercial, dysprosium, terbium, and potentially other heavy rare earth separation infrastructure that we plan to install in Utah next year. End quote. Pilot-scale production is expected to continue until approximately 15 kilograms of dysprosium oxide are produced. At that point, Energy Fuels intends to produce high-purity terbium oxide and is targeting Q4 2025 for the first samples of terbium oxide to be available for end-user validation. So Energy Fuels seems to be leading the charge here as the grip tightens in China. And finally, we have a story from August 22nd by Amanda Stott at mining.com. Vulcan Elements enters U.S. rare earth magnet manufacturing race. When U.S.-based rare earth magnet manufacturer Vulcan Elements announced this week it signed a supply deal with ReElement Technologies, the financial terms were undisclosed. But the company said the price is significantly below the floor of $110 per kilogram that the U.S. Department of Defense guaranteed to MP Materials last month. And as Vulcan CEO John Maslin told Reuters, quote, "This pricing will enable Vulcan to be competitive in global markets. We want to make sure the unit economics made sense," end quote. Let's continue. This is the Korea Herald. Korea Zinc signs germanium supply deal with Lockheed Martin. Of course, Lockheed Martin is a big defense manufacturer. This is by Chung-hee Lim at the Korea Herald. Korea Zinc, the world's largest zinc smelter, announced Tuesday that it signed a memorandum of understanding with U.S. defense giant Lockheed Martin for the supply and procurement of germanium and collaboration on critical minerals supply chains. The partnership, aligning with Korea-U.S. discussions on economic security cooperation, is particularly significant as it sets a precedent in securing non-Chinese sources of critical minerals. The event was attended by major business officials from South Korea and the U.S. following President Lee Jae-myung's first summit with U.S. President Donald Trump. Under the agreement, Korea Zinc will provide Lockheed Martin with germanium refined and produced in countries excluding China, North Korea, Iran, and Russia. In return, Lockheed Martin will purchase the material through an offtake agreement. Both sides plan to hold further discussions on long-term contracts. China currently dominates global germanium production, accounting for about 68% of the refined supply as of 2021. And finally, just a couple of more headlines from the continent of Africa. No geopolitics involved, Angola rail project not aimed at countering China, CEO says. And finally, just a couple of more. This is the South China Morning Post. So Nicholas Fournier says the Libido Atlantic Railway, quote, is purely a commercial entity, end quote. So Nicholas Fournier really going out of his way, as he says again in this article, it is, quote, a purely commercial entity with zero geopolitical considerations, end quote. And though that may be the intention, I'm not sure that's actually the reality. And final story for our introduction here, we're going full circle. So Washington was getting involved in Myanmar. Then we got this story, France 24, August 25th, so yesterday, Washington trades military support to Sahel juntas for access to mineral wealth. So let's take a quick look at this. Under President Donald Trump, the United States has reset relations with West Africa's military leaders on a mutual back-scratching basis, bartering help fighting jihadists for the Sahel region's mining riches, experts say. While Joe Biden was in office, the U.S. suspended most of the development and military aid it sent to Burkina Faso, Mali, and Niger in the wake of the rash of coups that brought juntas to power in the three restive countries between 2020 and 2023. Trump's return to the White House has shifted the U.S. away from that stance as part of a wider pivot in Washington's African foreign policy and its attempts to counter Russia and China's influence on the continent. Quote, trade not aid is now truly our policy for Africa, end quote, Troy Fittrell, the State Department's top official for African affairs, told an audience in Abidjan, Ivory Coast in May. So minerals dominating the discussion between states right now. Quite fascinating. So coming up this episode, we have a summer special, Rick Rule, in conversation with Henry Lazenby at the Rick Rule Symposium 2025 in Boca Raton, Florida. It's a great discussion on how gold's run isn't over and that the real crisis hasn't even started. So a wonderful interview with Rick Rule, courtesy of Henry Lazenby in Florida at the conference. So lots to look forward to there. Also coming up this episode, we have Christian Kargl-Simard, CEO of Blue Moon Metals, who discusses the company's projects in both Norway and the United States. And the one in Norway is considered a strategic asset for the European Union. So very interesting developments on the copper front with Christian Kargl-Simard of Blue Moon Metals. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Christian Kargl-Simard, CEO of Blue Moon Metals, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Christian Kargl-Simard, CEO of Blue Moon Metals. Christian, welcome to the show.
Thank you, Adrian. Nice to be on.
It's great to have you on, Christian. For those that are unfamiliar, could you give us a little bit of background on the company?
Sure. So a little bit about my background, metallurgical engineer originally and turned investment banker. I started a company called Adventus Mining Corporation late 2016. We spent 8 years building a copper business in Ecuador. We sold that last year to Silvercorp for around $250 million. And Silvercorp is building a copper mine that we had advanced to a construction ready stage in Adventus. We are very bullish on copper in particular. We want to create a multi-asset, multi-jurisdictional critical metals mining company. And we took some of our large shareholders from Adventus, some of the key team, and have brought them all together in Blue Moon Metals to try to achieve that. And over the last 10 months, I've been in the position of CEO for 10 months. We've been able to accumulate three very interesting, call it new to the market critical metals mines, one in the United States called Blue Moon, and two in Norway called Nussir and NSG. All three are permitted for underground development. Nussir is fully permitted to production, and our goal over the next 5 years is to put all three into production and be a 50,000 ton per annum or so copper equivalent producer at first quartile cash cost.
Well, that is pretty exciting, and it sounds like things are moving pretty fast. Before we get to the projects themselves, who's all involved here? Could you tell us a little bit about the team that is working on these projects?
I'll start with the board. My outgoing chair at Adventus is a lady by the name of Maurice Belanger. Maurice is well known for mine construction. Her last two successes were coming into IAMGOLD during the construction of Cote Lake when they had lots of challenges. She came in as chair and CEO and turned around that construction process, and the stock has almost been 7 or 8 times return since she joined. Prior to that, she was the president and COO of Atlantic Gold through the construction of their mine in Nova Scotia and a big win, a sale to Australian company a few years ago. So she oversees the construction team, the technical committees. She wanted to be part of the next thing that I was involved in. And Haitham Hoadley, who's now the president of Wheaton Precious Metals. Wheaton was a major stakeholder in Adventus, also wanted to work with me. So the three of us were the brains originally behind Blue Moon Metals, kind of the foundational properties that we were able to put together. And then from Adventus, we were able to bring over Scott Mealer, who is our president and COO. Prior to Adventus, he was one of the chief mine builders for Kinross Gold. Also, our CFO came over from Adventus. One of our VP projects, since we're building 2 mines, Dustin Small, came over from Adventus as well.
Okay, excellent. So turning to the projects then, is there a flagship? Is it the Strategic Critical Raw Material Project in Norway? Well, you mentioned 3 projects. How do you see them in terms of the company's profile?
Yeah, I love having 3 projects because I believe our valuation can justify any of the 3 projects today. And so there's limited downside. I see the company having 2 material projects. Nussir in Norway, which indeed it has this special EU critical metals designation, the only copper project in the world that has this designation outside of the EU. So that's pretty special. And also Blue Moon in California. If you think about a breakdown of NAV per share, Nussir would be around 45% and Blue Moon kind of 35 to 40%. And we plan to have both of these in production ideally by the end of 2027.
Right. And you have some pretty good news in the sense that you just received some funding for the Nussir project in Norway, and you also have all of your permits. Is that correct?
We have all of our permits for Nussir. We started construction in May. Our focus right now is driving the tunnel or the decline, which will hit the ore body sometime in the first quarter of next year. That's going very well. We wanted to give confidence to all of our stakeholders, as well as our team and board, that we had the capital to see through construction. And so it would seem maybe quick to put out project financing, but we're building. We're spending serious amounts of money. So it's important to show that confidence. We had cumulatively $1.2 billion of financing interest for this project financing package. It's important to note the players involved in the $140 million package. Half is Oaktree, That's one of the largest asset managers in the United States. They're diversified. They have played mining, but this is the first time they've done project financing and, most importantly, invested equity into a mining company. Another half is being done by Hartree, which is not really a household name in mining, but they are the third largest metals trader in the world after Glencore and Trafigura. Interestingly, Oaktree owns 70% of Hartree, and Brookfield, the big Canadian asset manager, which Mark Carney, our prime minister, used to be chair, controls Oaktree. So that's an interesting chain of ownership.
You also have the Blue Moon project in California. What is the profile there? It sounds like the EU, the Norway project, the Nussir project sounds like you're on the fast track. At least this seems like the kind of project that the EU wants to really move forward. How are you seeing the Blue Moon project in California?
Everything in life, but also in the mining business, is about timing. And the best timing to be building a mine in Norway and the United States is today, probably in my lifetime. And Norway and the United States are very similar in terms of they are really focused on security of supply for critical metals and bringing that security back home in light of the geopolitical landscape. In some ways, we're on a fast track in California as well. I mean, the project used to have reserves. It had its water discharge permits in place. We received our permits to build an underground mine. Both projects should produce around 20,000 tons per annum copper equivalent each. But the California project is super economic at today's pricing. And it is a underground mine with a very small footprint, 4.5 miles from where the California Gold Rush started in California. So there's a deep history of mining in the area. We are planning to start underground development, so portal blast, in October of this year. And the next 18 to 24 months will be underground development, reserves development, which hopefully will lead to production in a few years. And we have very strong support from our county as well as our congressman to get that going.
As we start to wrap up here, Christian, what is the roadmap here? How do you see things playing out in, say, the next, 6 to 24 months?
Well, we have a slew of news between now and end of the year. This project financing piece was very important because it puts to bed on how we finance Nussir. We expect at least one, maybe two financing announcements, maybe both strategic, over the next 2 months, which will give the comfort on how we finance Blue Moon and our third project, NSG, and corporately over the next 2 years. Announcement of the construction start at Blue Moon is important, and we're also looking at some milling solutions for Blue Moon as well. Over the next 2 years, this story is going to move from this year, kind of the building blocks of this company, starting underground development on all three projects, to also bringing in the exploration story on all three projects. We think each of the projects can double or triple in resource size, which will be very exciting in parallel news flow as we build out the projects. And we think as we execute on the projects, our valuations should re-rate in parallel as well.
Okay, excellent. And so finally, what is your message for investors? What do you want people to know and take away who are listening to the program here and listening to our interview?
Well, there are less than 10 public companies in the world, like on all exchanges, that are focused on building and operating junior base metal mines. That's it. And of those 10, 3 of those companies were acquired in the last 3 months. So it's definitely a very active and focused on space, lots of money flowing into it. So I'm very pleased that we have the strategy and the support to be part of that. Interestingly, 2 of those companies just acquired, Adriatic Metals and MAC Copper, were acquired for about $1 billion US and have a production profile similar to where we should be in a full year 2028. So our current market cap is about 135 million US. That is a significant return to $1 billion over the next 2.5 years. So there's a very significant re-rate that I think will happen. And also combined with that, because our projects are brownfield with significant infrastructure And up to yesterday, there was no debt, no streams, and little to no royalties. There's a lot of internal financing capacity in the projects to finance them into production without raising a substantial amount of equity and diluting our shareholders. And so I think we can build the first two mines here between $200 to $250 million all in and be able to finance, call it 80% of that non-equity. And if we can do that, we will have a very exciting 2 years ahead of us and make a lot of money for investors.
Christian Kargl-Simard, CEO of Blue Moon Metals, thank you for joining us and sharing everything you're working on at the company.
Thank you, Adrian.
And thank you once again to Blue Moon Metals for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, a big story, a continuing shift in the environmental narrative that the mining industry has been pushing, I'd say going on 10 years. Reinhardt joins push against costs of net zero. First we saw BHP, then we saw Rio Tinto say green iron ore is not feasible. Now we're seeing Gina Reinhardt, mining tycoon, echo this sentiment. This is Bloomberg News via mining.com. Gina Reinhardt, Australia's richest person, has urged the country to ditch its pursuit of net zero emissions, insisting the costs of climate action will devastate sectors from healthcare to logistics and defense. The billionaire, who has frequently criticized climate science and green policies, adds to a strengthening global pushback against efforts to slash greenhouse gas pollution, a movement that's been emboldened by President Donald Trump's moves to curb activity in the United States. Quote, "There's nothing wrong with individuals choosing to spend their own money to aim for net zero. But why should executives use shareholders' money and governments use taxpayers' money unproductively?" End quote, Reinhardt wrote in an op-ed column published Wednesday in publications including the Herald Sun newspaper. Well, I guess the reason would be if you're actually concerned about greenhouse gas emissions. I mean, this is basically what it comes down to. If you're concerned, then the profits are secondary, or using taxpayers' money unproductively. I guess if you think it's real, you don't think it's unproductive. Let's continue. More consideration is required of the, quote, many Australians that net zero requirements by our governments will hurt. The cost Australia simply cannot bear. It's time for the truth. End quote. Reinhardt is a vocal supporter of Trump and this year boosted her holdings in his social media platform, Truth Social. Australia, one of the world's largest per capita emitters, is targeting net zero by 2050 and in 2022 set legally binding targets to reduce carbon dioxide emissions by 43%, below 2005 levels by the end of this decade. Prime Minister Anthony Albanese's centre-left government, which retained office in a resounding May election win, is finalizing proposals for additional cuts to pollution through 2035, and also seeking to jointly host next year's flagship United Nations Climate Summit with Pacific nations. Interesting development there. More on the ESG front. Trump raises stakes over Resolution Copper project with BHP, Rio Tinto CEOs at White House. It's Bloomberg News via mining.com. President Donald Trump met with chief executive officers of the world's two biggest mining companies to discuss a copper project that could supply the U.S. with a quarter of its demand for decades to come, adding greater weight to his push to boost local output of the vital metal. Rio Tinto Group's Jakob Stausholm, his incoming replacement Simon Trott, and counterpart at BHP Mike Henry met the U.S. leader to discuss the Resolution project in Arizona, according to a LinkedIn post by Stausholm. In a separate post, Trump criticized a court judgment that set back the development, insisting the U.S.'s need for greater domestic production was urgent. Scrolling down, final environmental approval for the mine was given in June. However, opponents then lodged an appeal seeking a review of the decision. On Tuesday, they won a delay in approving a land swap that's key to the development. Trump criticized the court's decision in a social media post that coincided with the visit by the Rio Tinto and BHP executives. So, critical minerals at the top of the agenda for the U.S. president, amazingly. Now, continuing on, we have more stories relating to this fixation. As Foreign Policy puts it, Trump weighs using $2 billion in CHIPS Act funding for critical minerals. This is Reuters via mining.com on August 22nd. The Trump administration is considering a plan to reallocate at least $2 billion from the CHIPS Act to fund critical minerals projects and boost Commerce Secretary Howard Lutnick's influence over the strategic sector, two sources familiar with the matter told Reuters. The proposed move would take from funds already allocated by Congress for semiconductor research and chip factory construction, avoiding a fresh spending request as it seeks to reduce U.S. dependence on China for critical minerals used widely in the electronics and defense industries. Boosting Lutnick's role over critical minerals financing would also help centralize the administration's approach to the sector, a push sought by White House officials after the rollout of the Pentagon investment in rare earths company MP Materials last month sparked questions about the U.S. government's mineral strategy, one source said. The White House did not respond to requests for comment. Pentagon officials were not immediately available to comment. MP Materials declined to comment. So interesting development there. As well, U.S. adds copper, potash, silicon in critical minerals list shakeup. So we're talking the last 7 days here, and we are seeing headlines all over the place. So let's take a look here. This is by Cecilia Jamasmy at mining.com. The U.S. government has added copper, potash, and silicon to its draft list of critical minerals in the most significant overhaul since the list was first published in 2018. The update, mandated every 3 years under the Energy Act of 2020, follows the 2022 version and now includes 54 minerals. 6 were proposed for addition: copper, silicon, potash, silver, lead, and rhenium, while 2, tellurium and arsenic, were removed. Copper and silicon were included because of the severe economic consequences that supply disruptions could trigger in refined forms, Kendra Russell, Chief of Staff, U.S. Geological Survey, said. Lead and rhenium, which narrowly missed the 2022 cutoff, were added under the new methodology. Potash was also included after updated modeling flagged the risks of potential trade barriers from major suppliers, particularly Canada. Silver was added to hedge against a low probability but high impact disruption scenario in Mexico. USGS Acting Director Sarah Reich said, quote, mineral-based industries contributed over $4 trillion to the U.S. economy in 2024, and with this methodology we can pinpoint which industries may feel the greatest impact of supply disruptions. Now this next headline definitely created an exclamation mark in my head here. U.S. seeks to stockpile cobalt for first time in decades. Doesn't that just remind you of the headline out of China over a year ago, where China announced they were going to start stockpiling cobalt, and we were hearing from the people who were in charge of stockpiling in the U.S., still in the old paradigm, I would argue. The previous paradigm, I would argue, was basically looking at the world globally and saying, is there enough cobalt to go around? And if there is, there's no sense stockpiling it. And we have the DRC, Democratic Republic of Congo, cutting off exports of cobalt just because it was being flooded in the market, and we saw it in the prices. That was the old paradigm, but the new paradigm, I would argue, is much more of a resource nationalism paradigm, which is, are we self-sufficient? If the DRC and China decide to cut off our minerals, our cobalt, do we have enough cobalt? Are we able to continue running our economies, running our military? As it says, the U.S. Defense Department is seeking to buy cobalt for its strategic stockpiles for the first time in decades, the latest move to bolster domestic supplies of critical minerals. The Defense Logistics Agency is seeking offers for up to 7,500 tons of cobalt over the next 5 years in a contract worth up to $500 million, according to tender documents published this week. It's the first time the DLA has sought to buy cobalt since 1990, according to a person familiar with the purchase. The Pentagon's purchase highlights a shift in government thinking about such metals and would be a major intervention in the cobalt market, accounting for about 1/6 of non-Chinese supply of alloy-grade cobalt, according to a Bloomberg calculation. It comes after prices have already been driven higher by an export ban from the metal's top producer, the Democratic Republic of Congo. For many years, the DLA was a seller rather than a buyer of cobalt, as budget cuts in the 1990s and 2000s led it to sell off what had once been a giant stockpile of the metal built up during the Cold War. In recent years, however, securing supply chains for metals like cobalt has become a political priority as officials seek to reduce reliance on China. The Pentagon did not immediately respond to a request for comment. Remember how last year we were hearing about how China was oversupplying the market with metals and nickel, for example, one we could say right now, or until recently, lithium? And I came here show after show saying, just buy it. If China and Indonesia want to sell you nickel below $7 a pound, just buy it. You're simply saying, hey, this is cheap, even cheaper than we can make it for. Our companies are going out of business. We might as well buy it. And what that'll do is it'll firm up the market because all of a sudden you're stockpiling a bunch of nickel, and all of a sudden your producers might actually still be in business. So again, just from my personal perspective here, like nobody should be complaining about cheap metal prices, which is often what we see. Like in a sense, that's the opportunity of a lifetime is how this should be viewed, as it should have been viewed with cobalt a year ago. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.3%. That is 0.04% lower than last week. The UK 10-year gilt is yielding 4.74%. That is down 0.02% on the week. The Italy 10-year bond is yielding 3.61%. That is up 0.01% on the week. The German 10-year Bund is yielding 2.74%. That is down 0.04% on the week. And the real standout is the Japanese 10-year bond is yielding 1.64%. It continues to climb. It is now 0.05% higher on the week. And finally, the Chinese 10-year bond is yielding 1.76%. That is 0.03% higher on the week. Turning to precious metals, gold is trading at $3,419.40 per ounce. That is $36 higher than last week. Silver is trading at $38.48 per ounce. That is 43 cents higher than last week. Platinum is trading at $1,325.70 per ounce. That is $1 lower than last week. And palladium is trading at $1,077 even. That is $35 lower than last week. Turning to industrial metals, copper is unchanged at $4.46 per pound. Iron ore is trading at $101.42 per metric ton, edging 20 cents lower than last week. Aluminum is higher at $1.19 per pound. That is 2 cents higher than last week. Lead is trading at 91 cents per pound. That is a penny higher than last week. Nickel is trading at $6.79 per pound. That is 8 cents lower than last week. Tin is trading at $15.34 per pound. That is 6 cents higher than last week. Cobalt is unchanged at $15.12 per pound. Lithium continues to climb at $11.97 per kilogram. That is 45 cents higher than last week. So quite a move here in lithium, up almost 50% from the low only a couple of months ago. Uranium is trading at $74.05 per pound. That is $1.05 higher than last week. And zinc edges higher at $1.27 per pound. That is a penny higher than last week. Zooming out, the real story continues to be lithium, with gold and silver showing some strength, and nickel continuing to languish, and copper significantly remaining at fairly low levels compared to where it was. And those are your metal prices. Coming up this episode, we have Rick Rule interviewed by Henry Lazenby at Boca Raton, Florida for the Rule Investment Symposium, where Rick Rule describes why he believes the bull market in gold has further to run, as well as giving his views on investing in mining companies. I hope you enjoy it, and I will see you on the other side.
Thank you for joining the Northern Miner here in Boca Raton, Florida. We're joining Rick Rule at the Rule Investment Symposium. Thank you very much for joining me, the man himself, Rick Rule.
A pleasure. Thank you for coming down. I've been a beneficiary of the Northern Miners' work since university in the 1970s. So
wow.
It's great to have you here.
Excellent. Always a pleasure. Right, so let's just dive right in. Yesterday on stage, you mentioned that Americans hold about 141 trillion in net worth, 30 trillion in net debt, and about 100 trillion in off-balance sheet obligations. How do you use those figures to size resource allocations today?
Well, traditionally, as an example, gold has done well during periods of time when people are concerned about the maintenance of their purchasing power in fiat-denominated, US dollar-denominated obligations. I would suggest that the fact that we're worth collectively 141 trillion and we owe 130 trillion, particularly when the debt is growing on and off balance sheet by $4 trillion a year, should cause precisely that concern. All I was trying to do with that was put into quantifiable terms what people were going to hear from the macro panel. I wanted to introduce the math. If you believe that gold does well when people are concerned about the deterioration of the purchasing power of the US dollar, what I try to do is put in context why people should be concerned. I read a little poem which I'll recite for your listeners. When your outgo exceeds your income, your upkeep becomes your downfall.
Right, that's very cute, but it's a very powerful little poem. Yeah. Okay, so you urge us to thrive, not survive, by backing businesses with pricing power. What signs do you look for when judging a resource company's pricing edge?
Well, I was trying to say there, it doesn't need to be resources. I pointed out that in the 14-year period, 1968 to 1982, when the equity markets were sideways to down, Warren Buffett delivered a 22% compound internal rate of return outside resources. Resources aren't going to be all of anyone's whole portfolio, but you need to pay attention to a different kind of company going forward than the kind that you've paid attention to in the back. With regards to natural resource investments, I suspect that the wind, particularly in the gold sector, is going to continue to be in your sails. People have asked me, do you think that gold has run its course? I, of course, came into business in the decade of the 1970s, and I would remind your listeners that in the 1970s, the last period of sustained deterioration of the US dollar, the gold price ran 30-fold. So when people ask me, is the game over? I say, have we solved the debt problem? Have we solved the deficit problem? Have we solved the entitlement problem? Have we solved the spending program? If the reasons to own gold haven't gone away, gold doesn't go away. Later on in this decade, I think that we're going to have a more broader-based natural resource market, both because inflation will make replacement more expensive, but also because we've underinvested in natural resource front-end exploration activity for 30 years. And those chickens are going to come home to roost, exactly as they came home to roost in the decade of the 1970s. The 1970s were partly the culmination of a 30-year period of underinvestment in natural resource and extractive industry, front-end expenditures. We're facing the same thing today.
Okay, so how would you suggest investors position to take advantage of this opportunity?
Great question, but impossible to answer. If you assume that there's 8.2 billion people on Earth, there's 8.2 billion answers to the question. How hard are you willing to work? How much risk are you willing to endure? How much volatility are you able to endure? What's your time preference? I understand the question, but the truth is I've graded now tens of thousands of portfolios for people. And I've learned painfully that there's no one-size-fits-all answer.
So you mentioned the concept of doing the work, whereas an investor could perhaps just invest in the deltas like Wheaton Precious or Agnico Eagle. But what does the work entail if an investor wants to actually play the smaller stocks?
We urge people to use this conference in conjunction with the Rule Classroom, where there's a couple hundred hours of instructional programming. It's very important that you understand how to do at least rudimentary securities analysis if you're going to take some risk in your portfolio, if you're going to go after alpha. As you suggested, for many investors who just want to shield themselves from the deterioration of the purchasing power of fiat currencies, you should own the metal and you should own the best of the best. You should own the Francos, the Wheatons, the Agnico Eagles, and then read books, garden, play with your kids, whatever you want to do. The truth is, in a gold bull market, the best of the best give you very, very, very good returns with no work and very little risk. If what you want to do, however, if you're a Northern Miner subscriber and you outperform the market, if you're looking for alpha, then you need to do the work. You need to understand the track record of the people running the company. You need to understand something about the unanswered questions that will increase the market's understanding and hence the price of the investment. That gets much, much, much more difficult. We have given people here a curated list of 65 exhibitors. It is, in order to be an exhibitor at this conference, you have to be owned in the accounts of the conference sponsors. So we vetted every single exhibitor. That doesn't mean that the share price of everybody here is going to go up, but it does mean that we've given you a shopping list that's been curated. We turn down more exhibitors than we accept. The idea is that you use the information that you get from the podium on the exhibitors, learning how to, in movie parlance, segregate between the good, the bad, and the ugly. And then, hopefully, the conference more than pays for itself based on the shopping list that we've assembled for you.
Yeah. Fair point. There's a great shopping list available here, but we find ourselves in turbulent geopolitical times, really. You coined the phrase pounce, not panic, for market meltdowns. How do you tell a genuine sale price from a value trap?
Well, every time I buy a stock, I write down on one page why I bought it, what will cause me to sell it. Money is made from my point of view on the disparity between the price in something and its value. If you have an opinion as to value, price begins to matter. For many people, they have no opinion as to value. They don't know if 60 cents is overpriced or underpriced. For me, when I have an opinion about value, I might be right, I might be wrong, by the way. A precipitous decline in the share price, if nothing has happened to change the underlying value of the company, represents an opportunity as opposed to a threat. If you think something is worth $2 and it's selling for $1.75, and then it falls to selling for $1, what's really happened is that that good has gone on sale. That's an opportunity as opposed to a risk. Similarly, if you think the thing is worth $2 and it goes to $4 and nothing has changed, except the public's perception, while you're happy about the fact that the share price has doubled, it's become precisely twice as risky.
Right. Okay. So you warned against relying on fixed income retirement and advised younger investors to invest into knowledge and reputation. What 3 skills or connections must a junior geologist build to compound value over decades?
That's a great question. I had the huge advantage when I was a very young man of probably accidentally running into extraordinary mentors. And what I was able to offer as a young person was interest. These people could tell that I had a real hunger for knowledge. And the consequence of that is that I was fun to teach. I also worked very hard for them. I had the extraordinary good fortune at age 21 to fall into the spell of one Adolf Lundin. Rest in peace. The idea that one of the greatest financiers in the history of junior exploration was accessible to me was incredible. The truth is that these people are accessible to everybody. The CEO of Agnico Eagle and the CEO of Wheaton Precious are walking around the floor at this conference. Any young geologist who happens to be here would be well advised to go up, shake their hand, give them a call, and say, I would love to visit with you at some point in time. I think with regards to those 2 gentlemen, the probability that they will honor that request is 100%. You just have to ask.
Very valid advice there. So I apologize, I'm taking you on a whirlwind here. I want to touch on the mergers and acquisitions in the industry as well. How do you read the landscape at the moment in the juniors to mid-tier section? Do you see opportunity?
Oh, right now it's extremely healthy. Right now we're in the early stages of a bull market, so the stupid asset allocation, the stupid acquisitions aren't happening, which is wonderful. There are a couple reasons why well-constructed M&A works well for everybody. The first is that if you consolidate more assets under one management team, you lower general and administrative expense relative to assets under management and or free cash flow. The second thing that happens is that with the increase in passive buying, the larger companies with larger market caps enjoy more trading liquidity, hence higher share prices, hence a lower cost of capital. The combination of the more efficient allocation of capital with regards to G&A and a larger, more liquid market cap, lowering the cost of capital. Cost of capital is a definitive competitive advantage in a capital-intensive business like mining. Right now, we're truly in the sweet spot. There's lots of room for strategic consolidation. There's lots of room for intelligent consolidation around simple math and simple mass. And the market will respect this. The larger companies with lower cost of capital will either take over the smaller companies, or value arbitrageurs will look down the quality trail to anticipate that type of thing, to equalize value. We're in the sweet spot right now.
Right. Okay, so let's quickly talk a little bit about the conference itself. How many attendees registered this year? What's the main theme?
I think there's two different constituents here. One is the live conference. There's about 600 paid attendees live, more people, because all of the exhibitors, are here. They brought spouses, the speakers, stuff like that. So there's probably 800 or 850 people floating around this wonderful resort. There's another 1,300 attending from 33 countries around the world via live stream. Post-conference, we will probably sell 300 copies of the recording. So the total reach of the conference is more like 2,200 or 2,300 people directly.
And these would be retail investment, the retail investment crowd mainly?
Mostly retail investments. There are 8, as far as we know, 8 wealthy private family offices represented here. We don't know who all the live stream people are, because we don't have as much familiarity with them as we do the live audience. Understand that this conference is almost 30 years old, so there's a constituency that comes year after year after year that we know well. The live stream component is only 4 years old, so we don't know those people as well.
All right, so I want to jump back to some macro themes. One of the key takeaways I took from yesterday's presentations was that it seems like with the geopolitical tension building and the debt situation deteriorating in America specifically, it looks like access to capital and debt specifically might become more daunting for junior miners or resource developers. Do you agree with that take? And where does this situation steer into eventually? How does this resolve?
I'm afraid, unfortunately, that there will be more capital available to the juniors.
Okay.
The junior industry is, I believe, hopelessly overcapitalized. I believe that probably 85% of the junior listings should go to their intrinsic value, which is 0. And that the capital then should be concentrated on the best of the best. My experience has been that a rising tide floats all ships. And my experience tells me that if the industry enjoys a couple more years of rising share prices like they've enjoyed in the last year, that generalist investors will come down to the space and they'll allocate capital stupidly.
Okay.
I understand that most of the issuers disagree with that point of view, but I've learned in my life that the industry is really hopelessly overcapitalized, and that what an investor has to do is segregate between the good, the bad, and the ugly. And that's really the theme of this conference, how you do that, how you allocate capital efficiently. The best of the best were able to raise money consistently through the bear market. I remember 3 years ago people saying, there's no money in the sector. And I'd go to participate in private placements for high quality juniors, and they were consistently oversubscribed, and nobody was giving me a warrant. The idea that there was no inducement to separate me from my money belied to me the suggestion that the industry was undercapitalized.
Okay, that's a very interesting point. So lastly, let me ask you, in the record gold price environment, when thinking about producers, how confident are you that they would not repeat the sins of the past by making stupid acquisitions and spending capital unwisely?
I think they will.
Yeah.
But I don't think they will for 2 or 3 years.
Because the damage is lasting, right?
When the gold market overcomes the skepticism that it still, for want of a better phrase, enjoys, and when aggressive management teams are rewarded, that activity will become pervasive again. The truth is, sadly, that stupidity is ubiquitous, and it will return to the sector. But it won't return to the sector for 2 or 3 years. The institutional investors that are in the space now were in the space in the period 2000 to 2010, where the worst of the prior sins occurred. And right now, the industry is subject to the reins of experience,
right?
Which is very healthy. As I say, right now we're in this wonderful sweet spot where the wind is at our backs, and we aren't confident enough yet, we aren't hubris-ridden enough yet to make the mistakes that plagued the industry in the decade 2000 to 2010.
Mm-hmm. Very interesting. So what's the most controversial take on the industry that you're willing to share with my readers and viewers?
I guess the suspicion that it isn't actually, over time, a contrarian, counter-cyclical business. There will come a time when the gold trade becomes a self-fulfilling prophecy, and people won't be coming into gold to protect themselves from the deterioration of the US dollar. They'll come into gold because the price is up. Mm-hmm. It's odd, but rising price levels justify the narrative. But by the time the rising price levels have justified the narrative, they're often so high that they're valueless. There will come a time, I think, when the gold price outpaces the deterioration of the US dollar and momentum players come in place.
Mm-hmm. Those are the big guys.
Yeah, people need to understand that in every market, ultimately the cure for high prices is high prices. The cure for low prices is low prices. When the narrative around gold becomes a self-fulfilling prophecy, then investors need to have the maturity to trim their positions and look for something else that's hated, which is tough to do.
Mm-hmm. All right. That's a good point to end on. Thank you very much. That was Rick Rule of Rule Investment Media, the host of the Rule Resource Symposium here in Boca Raton, Florida.
Thank you once again to Blue Moon Metals for sponsoring this week's episode of the Northern Miner Podcast. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.